If a business, government or individual wants to buy something abroad, they need to exchange their currency. I can't spend my British pounds in France, for example. I need to have euros. When one currency is changed into another, it's called foreign exchange, which is abbreviated to FX or Forex.
So every time we exchange currency for a holiday, we're actually completing financial trading transactions on the financial market. I never realised that.
Yes, and unlike shares or commodity trading, there is no central exchange used for Forex. Instead, currencies are traded 24 hours a day, 5 days a week, across a vast network of banks, dealers and brokers. This type of trading is known as over-the-counter or OTC for short.
Sounds like big business.
You bet it is. In fact, Forex is the largest financial market in the world, with trillions of dollars worth of transactions taking place every single day.
I see. So how does Forex trading work?
Forex prices are always quoted in pairs because you'll always be trading one currency for another. The first currency in a pair is known as the base currency, and the second is the quote currency. If you are trading UK pound sterling for US dollars, for example, you'll see the price listed as GBP USD. So, if the price is 1.3, this would mean that 1 UK pound sterling, the base currency, is currently worth 1.3 US dollars, the quote currency.
Okay. So looking here, what does JPY mean?
JPY means Japanese yen.
Ah, okay. So it's saying that $1 is worth about 111 Japanese yen?
Spot on. You are a quick learner. We won't go through all the currency symbols here. We'll provide them in the lesson materials section for you to review in your own time.
Is there anything else we need to know about Forex trading?
Yes, loads. But for now, just knowing how currencies are quoted and getting familiar with symbols is enough. As you build up your understanding throughout the course, you'll get to know currencies inside out.
All right. Tell us about the final asset class you mentioned, commodities.